All right, guys, we have some new hard numbers to explain to you exactly what is causing the massive inflation spikes that we have ultimately seen. This comes courtesy of the Economic Policy Institute. Let's throw this report up on the screen. According to their research and analysis, corporate profits have contributed disproportionately to inflation. They asked the question, how should policy makers respond? So there are basically three inputs to potential inflation here: corporate profits, non-labor input costs, and unit labor costs. So non-labor input costs are sort of like supply chain issues is what that could be. And so what they find here is that since the trough of the COVID-19 recession, the second quarter of 2020, overall prices in the non-financial sector have risen at an annualized rate of 6.1%. That's a pronounced acceleration over the 1.8% price growth that characterized the pre-pandemic business cycle. So huge inflation. And they say strikingly, over half of this increase, 54%, can be attributed to fatter profit margins, with labor cost contributing less than 8% of this increase. This is not normal, they go on to say. From 1979 to 2019, profits only contributed about 11% to price growth and labor costs over 60%. Non-labor inputs, a decent indicator for supply chain snarls, are also driving up prices more than usual in the current economic recovery. These are hard numbers to put to what we already knew based on what corporate CEOs were saying on their earnings calls of basically like, oh, since there's a little bit of inflation, we can use that to justify price increases above and beyond what our input costs actually would require. And also, we knew this was the case because when you look at corporate profit margins, they are through the roof. So it wasn't like they were being, there are definitely supply chain issues, no doubt about it. But it was not like they were being squeezed to the extent where they had to raise prices to the extent that they have. Instead, they have taken this as an excuse to have fatter profit margins. And let me go ahead and channel Matt Stoller and say part of why they are able to do that is because of massive monopoly consolidation across so many different industries.
Well, they actually write that. They're like, it's not like corporate greed got worse in the last 40 years. It's that they have the ability in order to enact corporate greed. I think that their warning here is really important, which is that evidence over the last 40 years says that you should see lower profits, they should shrink, that the corporate sector income should go towards labor compensation, and it should rise as unemployment falls and the economy heats up. But the fact that the opposite has happened so far in the recovery should cast doubt on inflation expectations, claiming that it's all because of macroeconomic overheating. All of that is a very fancy economic way of saying that if it were traditional inflation caused by sole government spending, then you would see a very consistent pattern where price increase would be commensurate with a drop in profit and purely as a result of unit labor costs. And because public companies in America have to report profit based upon the shareholder system, we know how much profit that they are making.
Right.
And we're like, hey, your profit is going up a lot. And also, as you point out all the time, they brag about it on the shareholder calls.
Right.
They're like, well, consumer price sensitivity has gone up in the days of inflation, contributing to profit. What do you think that means? Do you even need a translation? You go and you're like, oh, I guess meat is $12 a pound now. Just is how it is. Same with gas. I get excited when I see $3.90 gas, which a couple months ago, I would have been like, oh my God, $3.90. Now I'm like, oh my God, under $4 a gallon.
Right.
You go hunting around for that. So that's what price sensitivity looks like.
The only check on monopoly pricing power is basically consumer outrage.
Yeah.
Because otherwise, like if you've been conditioned to expect, as we are during these times, that prices are just going to keep going up and inflation is out of control, then you look at these prices and your rage doesn't go where it should at the corporations that are price gouging you. It just goes to the overall economic frustrations, this sort of like amorphous blob of trouble. And so that means there's no sort of consumer check and outrage around the specific price hikes on these goods and services that are, really hurting working class families. So that's why it's so important to understand specifically where this is coming from. I expect that it also has some implications in terms of Fed policy.
Oh,
because if inflation isn't sort of, in the system in the same way, and the Fed is making these aggressive moves, then that's going to change the way that the economy ultimately responds to the aggressive moves that the Fed is making. The other thing that it really exposes is these corporations that, Starbucks, Howard Schultz, and Amazon, and those folks that are crying about, oh, these union efforts and they're going to kill us and all this stuff. Clearly, you can afford to do a little better by your workers here, guys, especially giant monopolies like Amazon and Starbucks isn't exactly a monopoly, but they have plenty of market position here as well. So I think it shows you too, labor costs have only gone up, 8% of the increases from labor costs, 54% from corporations just using this as an excuse to jack up their prices and earn a fatter profit margin. Really super clear here.
I think what's funny too, though, is that we are all going to find this out the hard way, sadly, because here's what I think is going to happen. I think GOP obviously going to win in the midterm elections, and we're basically going to have probably some fake Tea Party type shutdown. They'll probably win in the 2024 election. They're going to cut corporate taxes even more. Profit is going to skyrocket. And in that environment, they're going to say this is the way that we combat inflation. But really what's going to happen is that inflation, consumer goods are only going to go up even more. So you are going to see very clearly exposed the deficit ideology on whether it's an inflation problem or not. And in that environment, maybe it's good because the public will have been cured of the idea that all you have to do is slash spending and everything is going to get better. So you'll see it real quick. Unfortunately, rich people are going to get a whole lot richer in order we find that out. I think that will almost play out to a T unless something happens on the supply side, which I don't see that happening in the next couple of years.
Yeah, I mean, we're in very treacherous financial terrain right now. No doubt about that.
There you go.
All right, guys, thanks for watching. More for you later. Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.